Good evening, everyone. I think depending where you are in Canada, it should be evening for everyone. Hope you had a great weekend so far and start to your week before joining this session. So there was a great introduction done for me. I can provide a bit more about myself. So my name is Katrina Di Raddo. It's my first time as a Migraine Canada presenter, but I've done presentations for other organizations. I've been living with migraines for a long time. I saw my first neurologist probably at around 10 years old. And then the issues of migraines took a back burner when I was diagnosed with type 1 diabetes 3 years later. And I was thrust into learning that new life while starting high school and everything. But my migraines, they've been up and down over the years, and then they kind of came back with a severe intensity about 2-3 years ago. Bit about my background. So Kaylee shared some of it, but how I got into the group benefit space. So it really all came around the hardships that I faced navigating access to my medications and supplies that I found frustrating. And my involvement with insurance companies as a patient is what really sparked my interest in the field. So when I graduated university, I started my career in the employee benefits realm, and I brought my experience as an end user of benefits to the inside, so the employer side, and then been working with employers and the insurance providers to ensure that plans are providing adequate support for their employees, and that employees are experiencing that excellent service and actually have coverage for what they need from those providers. And in terms of how I sort of look at my philosophy of running benefit programs, I really like to start at the most basic needs of an employee and build upon those to help each one reach their fulfillment and their maximum potential. And of course, being healthy is core to that foundation. And on top of my benefits work, I'm also a strong healthcare and patient advocate. You can probably tell why. So just a disclaimer, most of the information in the presentation is mainly catered to Canadian benefit systems, which should be exactly who the audience is here. The information on the slides, it's built on my professional knowledge, my personal experience. It's not formally endorsed by Migraine Canada. And also, one thing to note, none of the information on the slides takes into account the possible introductions of the government pharmacare programs that's been in the news a lot lately. So that's just one thing to note, that there could be changes to how these types of programs work once pharmacare starts rolling out more. So Kaylee mentioned if you have questions, you can pop them in the Q&A tab, and that way they're all in one spot. And then in terms of what you're going to learn in the webinar tonight, you'll receive answers to questions such as what's included in extended health benefit plans, what is disability insurance, and what's the difference between short and long-term disability, how do I ensure my return to work will be successful, and what type of accommodations are available to me at work. And of course, is my employer obligated to accommodate me? So we'll touch on those. All right, so just some brief introduction polls. For the first one, we had this question asked at the beginning, if anyone didn't put their answer in. So where are you tuning in from? What province or what city? I saw, or when we asked it at the beginning, there was some people from BC and someone from New Brunswick. It's just interesting to see where people are tuning in from. Now there's someone in the chat just says they don't see the Q&A tab. So Kaylee can probably address that, but at least you have the chat. So, okay, so I see New Brunswick there again. I'm based from in Ontario, so we have some different people from across the country here. Other question, how many of you have benefits through your employer, your school, or a spouse's plan? Like, do you have access to a benefits plan? Blue Cross through provincial government. Okay. None. And I'll just go, oh, sorry, I should have put my next. That was, do you have benefits? And then last one was, if you did have, or if you do have private insurance, which insurance company are your benefits with? So I saw now 2 Blue Cross, 1 Sun Life, with someone Manulife, Blue Cross, Manulife through their spouse's plan, BC, Manulife. Okay, so those are, I mean, those are pretty much sort of the big players in the benefit space anyway. So let's get on to what we're first going to talk about, which is what makes up a typical group benefits plan sponsored by an employer. So as I go through what they are, if you want to write in the chat which ones you have, that way, you know, we can see which ones are more popular or anything like that. But if you have a question, you can put that in the Q&A tab. So under health benefits, so there's life insurance. So that benefit covers you and possibly your dependents, depending on the plan, by providing a lump sum payment if you or the dependent pass away for almost any reason. AD&D, which is accidental death and dismemberment, this benefit covers you and also possibly dependents by providing a lump sum payment if you or the dependents pass away specifically due to an accident. So you'd get this payment in addition to the life insurance, or a payout if the covered person experienced a limb dismemberment. So another type of coverage, it's pretty common. Critical illness, this benefit will cover you and, again, possibly your dependents by providing a lump sum payment if you or the dependents were to be diagnosed with a critical illness that's covered by that specific policy. Disability insurance, so that benefit covers you if you're unable to work due to medical reasons, and we'll go into that more. Extended health and dental, your vision benefits, prescription drug coverage, those benefits provide coverage for you and usually your dependents for costs that are not covered by your provincial health plan. Spending accounts. So healthcare spending accounts offer tax-free dollars to spend on the medical expenses of your choice, while personal spending accounts offer taxable dollars to spend on other wellness items. Those could be like ergonomic office equipment, vitamins and supplements, a gym membership, etc. Under financial benefits, so we have the, so there's a few different options that your workplace may or may not have. So a defined benefit or defined contribution pension plan, a group retirement savings plan, a group tax-free savings account, and or a non-registered savings plan, employee share purchase plans, and stock options. That would be if the company is listed on the stock market. Also, I just noticed in the chat, it seems that some people don't have access to the Q&A, but we're a pretty small group, so you can put the questions in the chat. I can probably see them as we go even. All right, so this slide is a rough overview because every province, industry, and company does things differently. So for life insurance, you'll usually be covered for about 1 to 3 times your base annual earnings, and that coverage is usually paid by your employer, with an option for you as the employee to pay for additional coverage. Now, in terms of, is this a good idea? On the surface, it may sound like a good idea or sound ideal to purchase additional life insurance through your group benefits plan to have all your life insurance coverage in one place. but I always caution against it. When you apply through your group benefits plan, that policy is tied to your employment. If you ever leave the company, that coverage is gone, unless you convert it. But if you convert it, it'll often trigger a new health assessment and higher premiums. So I usually say don't waste your time with supplemental coverage through a group plan. Get your supplemental coverage through a personal plan that is not tied to your employment. And that way it stays with you no matter what. For the accidental death and dismemberment coverage, this one you're usually covered for about 1 to 3 times your base earnings. Some companies will just opt to offer a flat amount instead. The basic AD&D is often paid for by the employer, and then again with an option for you as the employee to purchase additional. With this coverage, it usually doesn't matter if you buy supplemental coverage through your group benefits, since medical assessments are not required and premiums are not tied to your age. Critical illness insurance. So not many employers offer this insurance in their base coverage, but if they do, it's usually a flat amount, somewhere usually around $10,000 to $25,000. If you wanted to purchase it as supplemental coverage through your group plan, they'll often let you purchase up to $100,000 in coverage. You may be able to purchase a small amount without a medical assessment, but otherwise approval and premiums are definitely based on health. Okay, so disability insurance. Short-term disability typically lasts anywhere from 3 to 6 months, and it'll pay between 65 to 100% of your base weekly earnings. That's employer dependent. Your employer usually pays for the short-term disability coverage. For long-term disability, that would kick in after the short-term disability period expires, and the benefit payment is usually based on a formula that equals around 50 to 75% of your base monthly earnings. At the majority of companies, employees have to pay for long-term disability premiums for 2 reasons. One is it saves the company a lot of money because long-term disability premiums are very expensive. And 2, if an employee pays the premium themselves, then any long-term disability benefit that you would receive if you were to be accepting the disability benefits, it would be tax-free payments. If the employer pays any percentage of the long-term disability premium, the long-term disability payout benefits would be taxable. So just a little interesting thing on why some companies will cover it or not cover it, but usually they don't. Okay, extended health and dental. Coverage typically varies, again, plan by plan and employer by employer, but between 70 to 100%, and you may have a deductible to meet as well. Vision benefits, you might have coverage that varies between 70 to 100% with maximums that are usually between $200 to $400 every 2 years for an adult or 1 year for a child. For prescription drug coverage, this again can vary between 70 to 100% coverage, and you may have a deductible to meet as well. So some plans will cap all or certain drugs to an annual maximum, and some have no caps. Spending accounts. So I talked about those a little bit in an earlier slide. The amount of those would really depend on the type of plan you have, the structure of that plan, and how comprehensive it is, which I'll discuss in another slide. But overall, the ranges could typically be between $300 to $500 per benefit year if your employer offers one. So here's a question you can answer in the chat. Again, pharmacare legislation will change these answers. But who pays for your health, dental, vision, and prescription drug premiums? So some employers, very generous ones, will pay 100% of the cost, but the majority will cost share. So, I mean, you have to contribute toward the cost. So, what is your cost share? Do you have an employer that covers 100%? There's not many out there. Or do you have to pay 20%, 30%, 10% towards your costs? So I see Natasha says on LTD must pay 50%. CJ, employer pays 80% of costs for unionized staff and pays 100% for non-union staff. One of the workplaces with union and non-union, those are fun. My employer pays 80%. Once I've spent 1,000 out of pocket, they cover 100%. I think that's what you're referring to. Yeah. So that was Megan who said that. Yeah. So some plans have they'll have a copay at first. So like Megan said, they're 80%. But once you've hit $1,000 that you've paid out of your own pocket, then they'll say, okay, we'll cover 100% for the rest of the plan year. But the first $1,000 you have to pay out of your 20% copay. And then Cameron says, was shared prior to short-term disability leave, but now I have to pay 100%. Yeah. Some companies offer what's called a traditional plan. And so that's where everyone gets the exact same plan and coverage. Whereas other companies offer what's called flex plans. So those are usually have around 3 tiers to choose from, like a silver, gold, and platinum or something. And it allows you more flexibility to cater to your specific requirements. So you can say, you know, I need the best drug plan, but I can have the lowest dental plan, and you can kind of flex your dollars around that way. Does anyone here have a flex plan, or do most people have a traditional plan where everyone has the same plan and coverage? No coverage, so pay everything on my own. Yeah, unfortunately, it's common. Okay, going on to the next slide. A few things I like to stress and remind people about when it comes to their group plan and starting a new job. First, when reviewing a job offer, check if there's a waiting period before your benefits kick in. So some companies will start benefits from your date of hire, but others will have a waiting period, sometimes 3 or 6 months. If there's a waiting period, you can ask or negotiate to have it waived. If they try to tell you it isn't possible, don't believe them. Every insurance company will allow the option for employers to waive the waiting period on request. So that's something I usually recommend. Second thing, before signing an employment agreement, I recommend asking to review their benefits plan or their benefits guide. Taking on a new job, it's a huge commitment, and because we have many medical expenses, coverage is important to know. If they didn't supply it already with your offer, you can request a copy of their benefit booklet and let them know this is important to you as an element of your total compensation. A reputable company and a recruiter would have no issues providing this. And then lastly, once you've signed the offer and you're onboarded with the new company, make sure to make note of the benefit enrollment deadlines. So that's super important. So with new hire enrollment, that would be your first deadline. So that's the deadline to enroll in benefits for the first time. Late applicants. So this is if you miss the initial deadline, then there will be you'll be considered a late applicant, and they'll likely make you do a medical questionnaire, whereas you wouldn't have to do that if you met the first enrollment date. Life events. So this is where you are able to change your benefits Mid-year, if you have a qualifying life event, so that's like you got married or you got divorced, you had a child, something changed with your spouse's coverage, and then annual enrollment. So usually it's flex plans that have annual enrollment, but that is when once a year, usually once a year, employees can go in, make changes to their plan before the next plan year starts. Okay, so coordination of benefits. So I saw some people here in the chat had said that they have coverage through a spouse's plan, things like that. So with coordination of benefits, what it means, first of all, is so when you have multiple insurance plans, coordination of benefits is going to determine the order of which insurers will pay, who pays first. And so when you have to coordinate benefits, so it's when you have multiple plan types, if you have coverage through your job or your school, your spouse's, a government plan, if there's a retiree plan, a veterans plan, things like that, the insurance companies are going to want to coordinate who's going to pay first, second, third, and all of them will say not first, or they'll try to. But in terms of how do they actually coordinate? There is actually standard insurance rules for the order of who pays first, second, third. The insurers follow this sort of universal rule. So the claim has to go through your own plan first. So if you have benefits through your employer, the claim has to go through your plan first. And then if your spouse also has coverage, anything left over can go through theirs. And then anything for your spouse's, any claim for your spouse has to go through their plan first, your plan second. Now, if you have kids, the way that the insurance companies have universally agreed is they say, okay, fairest thing is that whichever parents has their birthday first in the year, that's whose plan the child's claim gets submitted to first. So if parent one has their birthday in January and parent two is in March, it'll always be submitted, child's claims will always be submitted to parent one first and parent two second. Now, if you have two policies in your own name, so let's say if you work at two jobs, for example, you would claim from your full-time job before your part-time job. If both of your jobs are full-time, claim from the place that you started at first. If you have coverage through school and a job, claim from the plan that started first. So these kind of like universal rules. You don't have to memorize them. Your insurance companies will know about them. Okay, so in terms of, so this is going back to the healthcare spending accounts that I had mentioned before. So the healthcare spending accounts, again, they're a special type of account where your employer can deposit tax-free funds for you that can only be spent on qualifying healthcare expenses. So most insurance companies, if not all, will use the same eligibility list that the Canada Revenue Agency uses on the list of medical expenses that are eligible for tax deductions. And they'll say those are eligible for claiming through a healthcare spending account. Now, if you pay premiums for your health and dental plan, you can claim those through your healthcare spending account, yours or your spouse's. So that's something not everyone knows. Coordinating claims with a healthcare spending account. This is super important. You always want to submit claims through your core plan first to maximize the amount of money in your healthcare spending account. And then anything left over can go through your healthcare spending account. So for example, let's say you have a $100 drug claim and your plan covers 80%. Put the claim through your core plan first. So only 20%, which is $20, is taken from the healthcare spending account. Otherwise, if you just put the whole $100 claim through your healthcare spending account, you're using $100 of your healthcare spending account dollars when 80 of those dollars could have came from the drug portion of the plan. I just saw in the chat, what is a healthcare spending account if you are union? Is that something we don't have? Okay, so a healthcare spending account, it's a special type of, I don't want to call it a bank account, but it's a special type of fund of money that's allocated to an employee that they can use to spend on eligible medical expenses tax-free. So in terms of is it something that unions don't have or things like that? Not necessarily. It's totally plan dependent. A union plan could have one, a non-union plan could have one, or they couldn't, or either one could not have them. It really depends on what the overall type of plan you have is. If you have, typically how it works is if you have a really good, like a really, I want to say like rich, comprehensive core plan, like let's say, they cover, your plan covers, so many things and really high percentages, they might then not give you a healthcare spending account at all because they're putting so much of that money into funding the core part of the plan. But if you have a very basic core plan, like let's say, they don't really cover a lot, the percentages are low, then they might give you a healthcare spending account that's larger because you'll need to use those to offset the things that are not covered in the core plan. I know that might be confusing. I can always go into it more a little bit later. I see Megan says, I'm unionized and don't have one, but managers at my company get one. Yeah, I have a slide actually on union versus non-union. I'll get into that. Okay, how many people here are familiar with drug pre-authorizations and or had to go through this process with their own insurance company? It's very common for migraine medications, unfortunately. Yes, multiple times. Yep, it was confusing and overwhelming. Yeah. So, so specialty drugs. So these are usually biologic drugs that are made from living cells and treat complex chronic illnesses. So a few examples in the migraine world. So Ajovy, Emgality, Vyepti would be some that we're talking about in that category. Typically to gain access to those, your doctor has to complete a drug pre-authorization form outlining your diagnosis, your symptoms, and any previous treatments you've tried. And then once approved, it'll likely be for a specific period of time. So they might say, we'll approve it for 6 months, and then you'll have to, apply for renewal, something like that. And then you might also be asked to fill the specialty drug prescription at a particular pharmacy. Typically you don't have to. If you have all your medications at one pharmacy, and the insurance company is trying to say, we Shoppers is our preferred pharmacy, you should get your specialty prescription there. You don't have to. You can get it at the pharmacy where all your other medications are, because typically you want all your drugs in the same place, same pharmacy. But insurance companies will usually try to do that because it's cheaper for them. So lowest cost alternative. So this is a common tier method. It's typically for more expensive diabetes drugs, but I included it just for knowledge sake. So for drugs such as, I gave 2 examples there, Jardiance and Ozempic, those would be considered, higher cost drugs. And so the insurance company will want you to try multiple lower cost drugs first, and then fail them essentially before you're able to apply for the higher tier drugs. So it's similar to doing the drug pre-authorization method. And okay, so that's overall of the drug pre-authorizations. It's unfortunate that a lot of us are familiar with them. And I just saw that Wendy from Migraine Canada put in the chat that she's interested in chatting with people about their experiences with going through the drug pre-authorization process. And she put the email there. Okay, mental health support. So access to mental health support is so important, but it can often be daunting to figure out where to start. These are some suggestions and resources that I like to share with people. So first, you can review your coverage through your extended health plan. You want to look at the amount of coverage you have, the copay, the type of mental health providers that are covered, any reasonable and customary maximums. What that means is sometimes they'll say, we'll cover a social worker, but only up to $150 an hour or something like that. So look into those so that you're not caught off by any surprises when you go to submit a claim. In terms of where to start with finding a mental health professional, one resource that I like to share, it's the Psychology Today website. I like it because you can filter down really well to specifically what you're looking for in a provider. So you can filter to your location. If you want to filter by age, gender, ethnicity, sexuality, religion, the concerns that you have, the preferred types of therapy. If you know for sure you want to do CBT or different type, you can select those as well in your filters. And then you can read their bios on there. It lets you know how to reach out to them, gives you information on their educational background, their certifications. I love the website. You can also utilize your employee assistance program for short-term counseling. They also usually have nutrition and exercise support, some financial guidance resources, and they'll usually do legal referrals too. I do note there that it's for short-term counseling because an employee assistance program, they'll usually give you free sessions, like free like counseling sessions, but they'll usually give you maybe 3, like very limited amount. So that's why it's like short term. Like if you're just going through something in the moment, like situational maybe, and you just need someone to help get through it, the employee assistance program can be helpful for that. But if you're looking for that sort of long-term relationship with a therapist for ongoing counseling, the employee assistance program isn't where you'll find that. Consider virtual care options. So there's telehealth services. 2 examples there: TELUS Health and Maple. There's some other ones out there too. There's always new ones coming out. And then there's some self-guided ones such as iCBT or Togetherall. And provinces have telehealth now, often including virtual ERs. And your benefits plan may also include a subscription to one of the paid telehealth services. So you could look into that as well if that's something you'd want to utilize. And I just see Brill says, would also recommend doing consult interviews with a few therapists to gauge if there's a fit. That helps me. 100%. I work in HR. So, we interview someone to hire them. I, of course, would interview a therapist I'm going to see. And so again, on Psychology Today, or even wherever you can find someone, most offer usually like a 15-minute consultation. That's like a meet and greet. And yeah, you really want to make sure that you feel like you have a fit with them. Okay, so now jumping back into financial benefits that we skipped over at the beginning. So this table has a brief description of each one. As we go through them, feel free to add in the chat which of them you have through your employer, if you happen to have any. So with the defined benefit and defined contribution pension plans, so those are a retirement plan that either specifies your benefit amount based on earnings and years of service, or determines your amount based on the performance of the plan. A group retirement savings plan, it's similar to a personal RRSP, but contributions can be made directly from your payroll deductions, and they're often matched by your employer, which is great. Group tax-free savings accounts and or non-registered savings plans. So that's similar to a personal TFSA or non-registered savings plan, but contributions again can be made directly from payroll, and sometimes your employer will match those contributions as well. An employee share purchase plan. So this type of plan allows you to purchase shares of your company on the stock market at either a discounted price or at the market price, but with a match from your employer. And then stock options. So there's some different types. Some examples there: restricted share units, performance share units. These are usually for executives, and it allows the option to purchase shares of your company at a later time, at a specific price point. But again, that last option, the stock options, usually for executives. One thing I will say is, if your company has these programs, don't miss out on them, because if they have the company match, that is free money. That is free money, and you don't want to leave that on the table if you can. So you always want to try to maximize employee programs where there's employer match before doing, something personal. And if you leave your employer, you get to take those accounts with you. So you don't have to worry about, well, if I contribute through my employer and then I leave, I'm going to lose my money. No, if you contributed, you keep it. Okay, so you may have heard the term vesting period, which could confuse you with the term waiting period. They're quite different and important to distinguish. So a waiting period, so that's the time before you're eligible to enroll and begin participating in the benefit plans. So usually, again, 3 to 6 months, though it's becoming more common to be removed altogether, which I'm happy about. And then vesting period, so that's the time before the employer match portion belongs to you. That's usually around 2 years. So I mentioned in the last slide, anything you contribute to your employee RRSP or pension is yours. Your contributions are always yours. But the employer match will have a vesting period. So for example, if the vesting period is 2 years and you leave after 1 year, anything you contributed, you keep, but the employer is going to take their portion back. If you leave after 2 years, after the vesting period, you get to keep your portion and the employer's portion. So that's what vesting period means. And while you can't access locked-in retirement or pension accounts, you can withdraw from group RRSP accounts tax-free under the Canadian government's first-time homebuyers plan, which you can also access even if it's not your first time buying a home, if you are divorced for a certain period of time, and if certain people with disabilities, and also the government's lifelong learning plan if you're planning to go back to school. Okay, so this is the slide where I talk about advocating for changes, union versus non-union. So sometimes I see or I hear, or you probably have seen in here too, how come my friend and I are both with Sun Life, but her plan has no maximum on drug coverage, while mine caps out at $5,000 a year, and hers covers Emgality, but mine doesn't. What's the deal? It really is plan dependent, employer dependent. Sun Life takes direction from your employer. They will offer the coverage. Getting access to the coverage is another story. They can deny claims, and that's another story. But having access to the coverage is up to your employer. So Sun Life will tell your employer, if you want to put a drug cap on drugs, we'll do it. If you don't want to, we won't do it. No problem. Just let us know. But of course, the price for the plan is going to change. So if you want to advocate for changes to your benefits plan, there's typically 2 ways you usually go about it. So if you're non-union, benefit plans are typically renewed and renegotiated on an annual basis, and that's not necessarily a calendar year. So you can ask your HR or benefits rep when that renewal period is. And then you want to make sure your requests are known well in advance of the next renewal because negotiations take months. So, for example, at one company I worked at, our our benefit plan year was calendar, so January to December, but we would be already negotiating our renewal in the summer. So we needed 6 months of time to flesh out that plan. So you want to make sure that any requests again are known before the next renewal is being considered. Now, if you're part of a union, it's a bit tougher because benefit plans are typically they'll only be subject to changes when the collective bargaining agreement is being renegotiated. So you'll want to find out when your collective bargaining agreement is set to end and reach out to your union rep again well in advance to share what changes you'd like to see benefits plan have in the next negotiated collective bargaining agreement. And having other union employees support those requested changes can help make it a stronger case because the union reps usually have long lists of things they'll be demanding from the employer at negotiation time. And a benefit change request from a single employee may not make it to their priority list, unfortunately. So that's my tip for people that are in a union. Find out when your collective bargaining agreement is going to be renegotiated, and try to get rally some support from some other union members of changes you'd like seen, and get that to the attention of your union rep. Okay, so some money saving tips, especially if you don't have insurance coverage. So these are a few that I put together. So first bullet there, pharmaceutical companies often give doctors samples of their medications that they can offer to patients. So you can see if your doctor can provide you with any free samples of medications for you to try before committing, or to help you just get to that next coverage period. Second one there, most drug companies have some sort of patient support program that can help cover a copay or lessen the overall burden of a medication's cost to you. So you can reach out to your doctor and or the pharmaceutical company to inquire if there is a patient support program that's available for your medications. And the third one, you may already be aware of this. We are in tax time right now. But if not, your out-of-pocket medical expenses can be submitted on your taxes for a tax credit if the amount of the expenses equal at least 3% of your income, or the number for 2024 is $2,759, whichever is less. And I have the CRA's eligible list of expenses listed on a previous slide. All right. Okay, just going to briefly talk about one of my favorite programs. We can put aside our opinions of Gale and Weston and Loblaws and all that aside. But the PC Optimum program can make you money for buying supplies that you would be buying anyways. So that's why I love to share this tip. So as a general overview of the points program, if you're not familiar with it, base points are earned are 15 points per dollar spent, and 10,000 points equals $10. So for any supplies that you can buy over the counter in your province, do so on a 20 times points day and see how it adds up. So I put an example on the slide here. So for example, if an item costs $100, the points you would get, so 1,500 base points times 20, if you go on a bonus day, you get 30,000 total points. So you spent $100 on supplies that you needed, and you got $30 back in points. Now, if you have insurance coverage with a healthcare spending account that we talked about earlier, you can ask the pharmacist for an official receipt so that you can submit the claim for reimbursement. Then you could get back the $100 from the insurance, and you earned your $30 in points. If you don't have insurance, save up the points and redeem them on a bonus redemption day when your points are worth more and can get you more. And then submit those receipts on your taxes, as mentioned on the last slide, for your tax credit. So that's just my little tip. It's just something that can help if it makes sense to you. All right. So the Registered Disability Savings Plan, also known as an RDSP. This slide might also be timely in the middle of tax time. So what the Registered Disability Savings Plan offers is up to $1,000 per year in bonds and up to 300% in matching grants, up to $3,500 per year. To get access to this, you would apply for the disability tax credit. The CRA will reassess your taxes going back up to 10 years to apply that credit. And once the disability tax credit is approved, you could open the Registered Disability Savings Plan, and the bonds and grants will be backdated up to 10 years as well. So it could be a nice surprise. If you're on Facebook, there's a Facebook group for resources and assistance with helping apply for the disability tax credit and questions on registered disability savings plans. And having the disability tax credit approval, it can also help access different discounts that companies offer. I put just two examples there. So one is some phone companies offer an accessibility discount on phone plans. So if, for example, if you're approved for the disability tax credit, you can get $20 off a Rogers or TELUS plan. Then there's Easter Seals. They have something called an Access To card, which gives free entry for a support person to entertainment venues. So like movie theaters, museums, the aquarium, if you require assistance. So again, these types of benefits can help you get these additional things. All right, accommodations at work. So employers have an obligation to adjust rules, policies, and their physical spaces to enable everyone to participate fully. And that applies to any ground of discrimination. So not even just disability, any of the formal grounds of discrimination. And it's called the duty to accommodate. And so that's where it's sometimes necessary to treat someone differently in order to prevent or reduce discrimination to that person. I'll go into some examples of potential accommodations on the next slide. But one thing to note about this duty to accommodate is that there's a reasonable limit to how far an employer has to go to accommodate. So sometimes the accommodation is not possible because it either would cost the company significantly too much, or it would create health or safety risks by allowing, let's say, an employee to do something differently. And so that's known as undue hardship. So the employer can claim undue hardship as the reason why certain policies or practices have to stay in place, even though they might have a negative effect, but the employer has to provide sufficient evidence. So for an example of undue hardship, so let's say there's a pilot for a small airline, and they develop a medical condition, and it limits their peripheral vision. So because of that condition, they're no longer allowed to fly planes. The airline has very few employees, and there's no other jobs to offer them. The employer could argue that keeping the pilot employed would cause undue hardship, and that letting them go is their only option. So they would have to, again, justify that argument with sufficient evidence, but that is an example of when an employer could try to argue for undue hardship. The other thing is, employees can't hold out for the most ideal accommodation if a reasonable accommodation is offered by the employer. So if you reject a reasonable solution for an accommodation, the employer is usually found to have met their duty to accommodate. But again, it's the whole idea of, well, what's reasonable, to the employer versus to me. So there's always the gray area there. So these are some examples of accommodations for people with migraines that could be available at work. So adjusting lighting, providing a quiet workspace, noise canceling headphones, fragrance-free policies, flexible scheduling, the ability to work from home, permission to take breaks when needed, essentially modifications to the work environment that will minimize your triggers, like bright lights, loud noises, strong smells, and allow you to manage your condition effectively. And communication is a big part of that. And again, as mentioned, it's all within reason. So again, that duty to accommodate. So if your employer somehow says we can't provide anti-glare filters because it will cost too much, well, they're gonna have to prove that. All right, so this is just ensuring a successful return to work. So I kind of broke it down between things for employees to know versus management. So before returning, you want to ensure, of course, again, communication, open communication, planning that a return to work meeting with your manager. What is workload going to look like? And again, make sure your request and set up those accommodations that they'll be in place. And managers want to inform their team members of what the plan is, set up the equipment and the access for the employee returning, and arrange job training or shadowing if that's needed. On your first day back, you'll meet with your manager to review the tasks and your schedule. And your manager should ensure that you feel welcomed back, see if you have everything you need, any workplace changes that may have happened, bring you up to speed on those. That's always good to make you feel less left out. Your first week back, so you'll probably be attending regular check-ins. If there's any changes or additions that are needed, you can bring them up as soon as possible so that they can be quickly addressed. Managers, of course, want to be able to provide the supports that are being needed as they come up, as those changes are needed. And then ongoing, again, it's all about communication.